It's the Business Owner's Guide to Money.
At the intersection of your business finances and your personal finances.
With retired, longtime financial advisor and author, Ryan Urban. Let's get started. Here's Ryan.
And greetings. Welcome to the Business Owner's Guide to Money podcast. This is Ryan. Thanks very much for joining us as always. And of course, a quick reminder about us. We work with business owners and individuals on an hourly fee basis only. We're a consultant on investment planning and retirement planning and asset protection. So an on-demand service where you're not paying an ongoing fee on your assets. And you can reach me at alpha4business, alpha, the number 4business.com. Okay, today we're going to get a little deeper into business taxation. And we've discussed taxation in the past, and I think it's one of those topics that you really can't talk about too much. Now, if you're like me, you hear the letters IRS, and the hair on the back of your neck stands up a little bit. And we talk a lot about how smart tax prep and planning are crucial for a business, and you'll often hear us say, you know, you don't want to get sideways with the IRS. So in our limited time today, we're going to look at two things. First, how to stay out of trouble with the IRS, how to do what it takes to not get sideways with them. And secondly, though, what to do if you do get their attention. And as always, we're going to turn to an expert, and his name is Gary.Massey. Gary is founder of Massey & Company CPA. He has over 30 years of experience in tax preparation, tax planning, and get this, because it's the subject of today's podcast, IRS and state tax problem resolution. He is, you can find him at Massey and Company CPA.com, MASSEY and Company CPA.com. Gary, thank you so much for joining us.
Ryan, it's good to be with you today.
And you know as well as I do, Gary, we both worked with businesses for a long time, and taxation is just one of those things that it's always hanging over our heads as business owners. And what you don't want to do is just, do anything by panic. You want to be organized and plan ahead. What should a business owner's mindset be as they organize their taxes for tax preparation?
Well, what a great question that is, and indeed, taxes are something which trouble a lot of businesses, and I see it on a daily basis here in my practice here in Atlanta. And but if just like you said, if you're organized and you plan for it, you can really avoid a lot of trouble. You can stay out of tax trouble. Mm-hmm. And the first thing, let's keep at a very high level at first. Let's deal with the calendar. There are things that you have to be aware of during the year. And if you follow that calendar, that's the first way of staying out of tax trouble. So everybody knows about April 15th, mm-hmm. right? That's the original tax deadline for your personal tax returns. They can be extended 6 months until October 15th. So right now we're recording this, we're at the end of September, and we're just about 2 weeks away from October 15th. So people who are on extension, who haven't filed tax returns, have 2 weeks to get the returns filed. Mm-hmm. And so we're getting a lot of phone calls from people who need tax returns filed. The other important due date, there are a few other important due dates I would like to mention. One is March 15th. That deals with corporations. I don't see that as often as, if you have an S corporation, that's very common. The S corporation is due on March 15th. There's also another kind of corporation called C corporations, and we don't see that a lot in our practice. It's typically bigger companies, but March 15th, if you have S corporations, those are due, and then you can get a 6-month extension. Those are due on 9/15, on September 15th. So those dates, those 4 dates of March 15th, April 15th, September 15th, and October 15th are the key tax return filing deadlines that business owners need to be aware of.
So it's not a bad idea then, if you're an S corp, and that's what I was before I sold my practice. If you're an S corp, really April 15th, I always looked at March 15th as the day, because to get in both my business and my personal, because the two are essentially going to go together anyway. And so maybe that's a good idea for a business owner, would you say? if at all possible.
Absolutely. Yeah. And if you're able to, let's get that done. There's no shame in filing an extension. The only thing you need to be aware of with an extension is the taxes themselves will be due on the original due date. The payment of your tax is not extended. It's only the return. So that means if you don't pay your tax by say April 15th, you're going to owe some interest and penalties when you file in October. That's okay. It's not the worst thing in the world to pay a little bit of interest and penalties, but just be aware of it.
Right. So you're going to,
it's better to pay it soon.
Right. But what you're going to do then, and I remember bumping into this quite a few times where the business owners will say, well, we're not doing the taxes yet, so how do I know what to pay? So what you're going to try to do then is get some kind of an estimate for your taxes?
Correct. So if at all possible, you can pay an estimated tax with your extension. That will be in April. If it's an S corporation, you don't pay taxes with the S corporation return. It's done on your personal return. So that's in April. So if at all possible, make an estimated payment in April, and then you can file the returns in October if you're on extension.
Now, I can hear my old business clients asking this question. If I file an extension, is that a red flag with the IRS?
No, it's perfectly normal. We do them all the time. There's nothing wrong. The biggest companies file extensions. There's nothing wrong with it. It's totally normal.
Nothing to be ashamed.
Worry about nothing to be ashamed.
Gotcha.
Wouldn't worry about it. It's great if you can file on time, but if you can't, for whatever reason, file an extension. The one other thing, Ryan, that I want to mention that some business owners are not aware of, and those are quarterly taxes. It also deals with a calendar, but there are quarterly taxes that are required for people to pay, business owners or independent contractors to pay if they're not having their taxes withheld through payroll. So there are 4 quarterly tax payments throughout the year. And it's important that you do that for a couple of reasons. If you do not do it, they will again charge you interest and penalties for not paying quarterly. But on a practical level, if you don't pay your taxes in quarterly, when you get to the end of the year, you're going to owe a huge tax bill. And a lot of people are not prepared for that.
Yeah, absolutely.
So if you pay quarterly, it's a way of ensuring that you don't get behind the 8 ball with a gigantic tax bill that's going to hurt you, or that's going to, really impact your lifestyle.
Let's hit on one thing, Gary, that I actually talk about quite a bit, and that is, for example, I'm not into, I don't enjoy the tax part of, when I had my business. That was obviously not one of my favorite parts of it. And I wanted to keep things as simple as I possibly could. So what do you recommend for someone who well, let's put it this way. You want your taxes, when they go to your tax preparer, you want your tax information to be organized and complete and clear. And if you do that, I believe that your chances of getting sideways with the IRS, just because of, again, confusion, lack of information, wouldn't that be a fairly high priority as well?
Absolutely. Being organized is critical. Some accounting firms will give you an organizer which lists what you're going to need, and you can fill it out. That's always very helpful. Another issue, when you were asking me before about what are red flags, a very, very obvious red flag is if you forget to include a 1099 on your tax return. And it happens all the time, where the taxpayer forgets to tell the accountant about money that they received, and they got a 1099, and they just honestly forgot about it. So make sure to stay organized, keep yourself organized, and give your accountant all your 1099s. That's super important.
Yeah.
Anything like that, because the IRS is going to match all the 1099s and W-2s. That's going to match that in your tax return. And if there's anything missing, you will get a letter. There's an automated audit system which picks up all of those missing documents. So if it's missing, expect to get a letter. It will eventually come.
And that's a self-inflicted wound. That that's something
Absolutely.
that you really didn't give to your preparer.
Yes. If you don't get a 1099 or a W-2, because it can happen, you should ask for one. Ask your employer or your vendor or whoever it is who's supposed to give you this document. Ask for it.
Yeah.
Ask for it, because it sometimes it gets lost in the mail or people don't have the right address. So just ask for it. It's not an excuse to say that it didn't come to you.
Strikes me also, Gary, that I think most of us spend most of our time and energy on making sure that we're finding all the write-offs and all the expenses and everything else, but the opposite end of the balance sheet is going to be the income as well. So you have to make sure that you have an internal system that accurately and comprehensively records all income.
Ryan, that is so important. That's the foundation for everything that we do. And the way that I handle this in my CPA firm and my practice is we use QuickBooks Online for almost all of our clients. Most clients use QuickBooks. There are a few who use spreadsheets, a couple, but especially like real estate people who just own building, who own real estate rentals, they can usually use a spreadsheet. But if you have an active business, I recommend using QuickBooks, and either do it yourself if you have the time and the energy, or hire a CPA or bookkeeper to handle the QuickBooks for you. If you do your QuickBooks, and if your books are clean, and if you reconcile the bank account every month, then when it becomes tax season, basically everything is done. You just have to give it to your CPA and he can prepare the books.
Yeah.
And with a good set of books, if your QuickBooks are clean and reconciled and all tied out, and you have receipts, then I would say you're audit proof.
Yes.
Because if the IRS comes looking, you have everything ready to go. You just give it to them. And it will be clean, and you should have a clean audit, which means that they're not going to make any changes. So that's the foundation.
I think that also, Gary, that's a as I was whining earlier, I don't like the tax portion of running a business, but that's a learned skill. And it really, if you think about it, I mean, if you get into it here and you've done it a couple of times, it does get easier every time you do it. So it's not as if you're taking on a task that you can't handle. It's not necessarily pleasant, but also that process of going through your information, going through your income and your outgo, you need to have that information anyway for an up-to-date idea of how your business is doing. And that's why, I think I preach quite a bit on this show that things like the income statement, the balance sheet, I think a lot of people will run these things and then they just put them in the drawer somewhere because they feel some obligation to run them, and they don't sit there. And what I recommend to people is to use these reports, is to use them as questions. So, am I optimizing every line item on these reports, or am I not? And you go over that by yourself, or you can go over it with a key person, or your partner, or whatever else. But this information that we're talking about is a critical component in the financial foundation of the company.
Yes, it's a critical component with respect to tax planning. Tax planning can be done during the year, but once the year is over, there's very little you can do about tax planning for that year which is passed. But if you're in the middle of the year, you can do tax planning. You can make decisions about buying equipment or hiring family member. There are all kinds of things which one can do during the year that will reduce taxes. And that's called tax planning. It's legitimate, and we do it for our clients.
That leads me to my
very, very important.
Yep. And that leads me to my next point, and that is communication with your tax preparer. Tax preparers are not mind readers. And so, staying in communication with somebody like you is absolutely paramount. And the metaphor that I use is that a tax preparer, generally speaking, is looking in the rearview mirror. They're looking at the prior year. And as you say, there's only so much that can be done at that point. What you also have to do, and these are two different skill sets and two different activities, is look through the windshield at what's coming down the road and look for opportunities. And as you were saying, hiring people, if maybe you want to do a capital expense this year that instead of doing it next year, or vice versa, you want to make sure you're playing that game. But you can only do that if you're sitting there with somebody who can really help you through it.
That's right. And there should be a very tight connection between the financial advisor and the CPA.
Mhm.
because retirement planning is a big part of tax planning.
Yeah.
And there's a lot that you can do.
Mhm.
That's why the financial advisor and the CPA have to be in touch and talk throughout the year. There's a lot which can be done. But once you get to December 31st, all those options start to close. And it's very important that we talk during the year. That's really, really important before the year is ended.
Let's put a bow on this in terms of avoiding trouble. We've talked about red flags. So making sure that you have your calendar right, making sure that you're organized and complete and accurate so that your tax preparer does not have to be a mind reader, because that's where the mistakes are made. Anything else really
Paying
pop to mind?
quarterly, please add on quarterly. Make sure that they pay quarterly taxes.
Gotcha.
Very important. They need to add it. They need to make sure they issue 1099s at the end of the year.
Mhm.
If they pay contractors. A lot of people forget this. If you pay more than $600 to a contractor, you have to give them a 1099.
Yeah. Yep. Okay.
That's very important. That's a red flag. If you've been paying a contractor and you don't have 1099, there's a question on the tax return that says, did you issue 1099s? And if you didn't, you have to say no. And that's a red flag. So don't get yourself in that position. Another red flag for audits is if you have an S corporation, you have to pay the owner payroll.
Mhm.
It's called reasonable compensation. And there's a line on the tax return where it says, what was owner's compensation? What was the owner's salary?
Yep.
If you didn't do it, you have a potential problem that needs to be fixed. And we do that all the time. So those are red flags. So those are all things you have to be very careful about.
Okay,
let's
other
things though, if you do, maybe we should talk what happens if you do get a letter from the IRS.
That's where I'm going next. So the day comes when that terrifying letter comes, and Gary gets a panicked phone call from a business client.
Right.
What do you tell him?
Right. So the first thing, this is in the psychology of people, that they get the letter in the mail that says from the Internal Revenue Service, and they take it and they put it into a drawer because they don't want to deal with it. This happens all the time. And I guarantee you, if you do that, there will be a follow-up letter within a couple of weeks, and then a follow-up letter after that. There's a series of letters which comes from the IRS. It's about, I think it's 5 or 6 letters. When you get to number 5 and 6, you're in really big trouble.
Oof, yeah.
But at the beginning, you can deal with everything. So open your letters. Don't put them in a drawer. Don't forget about them. Read them. See what they say. And if you don't understand it, there's no shame. Mm-hmm. Give it to your CPA, and they can deal with it.
Mm-hmm.
And typically, they're asking for information. Like we talked before about if you have a 1099 missing. So that can be fixed. That's a legitimate thing. You can fix it. Mm-hmm. You can report what the right number is. We can deal with that. Mm-hmm. But if you wait and you procrastinate, it just makes the problem worse. Mm-hmm. And the penalties will start to accrue, and you'll get in more and more trouble. The IRS is not going to forget about that letter. It will continue. You'll continue to get letters. So that's the number one advice that I would give you about letters from the IRS. Mm-hmm. The other thing and that's related typically to things that are missing or taxes due. Another thing that can happen is if you are audited, and it does happen. It does happen. People get audited. So what happens is you'll get a letter in the mail telling you that you're being audited, and they'll send you, it's called an IDR, an information document request. And at this point, you should really have a CPA involved. You give it to your accountant, and they will go through it, and they will respond to the IRS. The IRS is made up of real individuals, real people, and we deal with them with the highest degree of politeness and courtesy, and we treat them how we would like to be treated. Mm-hmm. And if you do that, you will 99% of the cases, everything is going to be fine. You meet with them when they ask you to meet with them. They will work with you if for some reason you have a conflict. I just had one the other day. We have a client who's being audited, and we weren't able to get the information by the required time, so we asked for another 3 weeks, and they were as nice as could be. Mm-hmm. So if you treat them well, it should go well for you. So that's the first thing.
Okay. Yeah, and by the way, I'll jump in here, and that is that there's another extremely good reason to make sure that you have a system in place and that you're organized, because you don't know when this is going to happen. You need to be on top of this. So what's the next step here? What does this look like?
Well, so typically what happens is they're asking for information, and the information will include receipts. What they want to do is, when it comes to your expenses, they want you to be able to prove that it's a legitimate business expense.
Okay.
So if you bought, for example, furniture for your company, you just have a receipt that shows that you went to the store and you bought furniture. If you don't have the receipt, you're going to have problems. But if you keep the receipts, and if you have your QuickBooks that shows where the money went in and out, then you're pretty much audit proof. As long as you can look the auditor in the eyes and say, hey, look, this is a legitimate business expense.
Yeah.
If you're doing something wrong that you're embarrassed about, then you have problems. It does happen. People are embarrassed. Then you have problems. So, we have to negotiate these kind of things.
Right.
But there's a difference between making a mistake, an honest mistake, and doing something that's what's called tax evasion. Tax evasion is potentially criminal. I don't deal with criminal cases. We have to refer that to a tax attorney, because that could end up going to court. One can go to court for these kind of things. I don't deal with those myself. I deal with all the other, which is 90% of the cases, which are not criminal. So there's plenty to do, which is not criminal. And we do our very best to keep it out of tax court. But that's what you want to do. And as long as you're doing the right thing and you have your receipts and you can look the auditor in the eye and you're proud of what you did, you're honest, and you're not feeling guilty, you're going to be okay.
Do you know, when you're audited, Gary, when you receive this letter, is that a relatively random process, or have they found a red flag and want to follow up on it?
That's a great question. The IRS has its own internal mechanisms for deciding who to audit. We are not privy to all of those mechanisms as to who gets flagged and why. We can guess, if you have a guy who's making an average income, but he's taking enormous charitable contributions, that's suggestive of something fishy going on. Or if they are, you have a company and they're buying, say, airplanes, for their personal use, or it appears to be personal, that's going to be fishy. Or you have unusually high expenses, or things that are expected but are missing. I gave you the example before about an S corporation that doesn't have payroll for its officers.
Yeah.
If that's missing, you could likely be called in for that. So those kind of things can all cause problems. I'll give you another example which comes up. There's a rule about if you have more than $10,000 in cash transactions, you have to report them. So this applies to like auto dealers, for example. Some people go to a dealership and buy a car paying in cash. There's a form that the dealership has to send to the government that reports a cash transaction over $10,000. The IRS is going to find this out because it gets reported through the bank accounts, the large transactions. Anything like that that's missing is going to be a red flag.
Really, we keep coming back to the same things, Gary, and that is staying organized. And it's always been my opinion that when in doubt, keep the information. Don't throw it. In other words, if you're not sure if this is a write-off, worry about it later. Let your tax preparer tell you that it is or it isn't, or talk with them about it. But go ahead. Don't
put it into a shoebox. Be organized. There are people who put things into shoeboxes.
I know.
And then you have a mess of papers. Don't do that either. The best thing is if you take a picture with your smartphone and you file it away on a computer. That's the best thing. In an organized way, you say it was done on a certain date. It was a trip to Home Depot to buy something for your rental property, and label it as such with the name of the property. It was you were buying like plumbing equipment. Label it that way, Home Depot, with the date that you did it, and file it on your computer. That's better than any shoebox.
Gotcha.
Well, one thing that I do want to mention, because it's important and people should be aware of it. There's another kind of letter which you can get from the IRS, and that is for taxes owed.
Mm-hmm.
So it's not just audits. You can also get a tax bill.
Mm-hmm.
And that's what's called IRS collections, where the IRS is going after the taxpayer to collect the tax. And that's a big part of what I do.
Oh,
so there are options. If you owe a tax that you cannot pay, don't panic. There are things that you can do. And there are options. For example, there are installment agreements where you pay the IRS over a certain amount of time, over a certain number of years.
Mm-hmm.
You can pay that. There's the offer and compromise program,
Mm-hmm.
which you may hear about on TV. It's advertised on TV a lot, where you can pay some discounted number to the IRS to pay off a tax. There are, for people who are in hardship situations, there are things that we can do to negotiate if you're in a hardship. There are things that can be done, but the worst thing is to ignore it. But if you don't ignore it and you're proactive, you have your accountant or whatever, deal with the government, you can negotiate, and you can often get that tax down or work it out in a way so it's affordable for you.
Ladies and gentlemen, when you get a letter from the IRS, open it. Please just open it. And that's one of the tips we took away today. Gary Massey is with Massey and Company CPA. You can go to Massey and Company CPA.com, MASSEY, and Company CPA.com. Gary, I know that you are able to work with people nationally. And so if people want to get a hold of you through your website, they can do that. And I really appreciate your time. We have not really touched on this subject before. And it's so funny, though. Again, it all comes down to the same things. And that is you need to be comfortable with this. You don't have to know it. It's not your job to know it inside and out. But it is your job to provide your tax preparer with complete and accurate information, because they can't just, snap their fingers and have it come out of thin air for them. Gary, thank you so much. And thank you for joining us on the Business Owner's Guide to Money. We'll see you next time.